Okay. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. We are into the new week, 20th to 24th of June, and we are on 20th of June, start of the week. And between 5 and 5:30 GMT now, I will explain to you the Asian session live market analysis and also give the forecast for this week. So, if you look into that of the live market code page, you can see the net changes are phenomenal. And during the start of the session itself, they just said that British exit is eased out. As a result, they just quickly gained the levels in the case of GBP, and you know the net permissible level is 250 pips from that of the previous day close. Already they had done about 235 pips on the upside. So they will simply hold here and try to book profit of whatever they accumulated on the last week. So that is what is going to happen. In that process, you come across Euro has already gained about 101 pips. But in the case of Yen, which is showing a contrarian move and gained 49 pips. So when Euro and GBP are gaining, USD Yen is supposed to drop. But as they have been doing earlier, that when Euro and GBP are dropping, USD Yen was also dropping. As a result, Yen crosses were beaten down like anything. Now when Euro and GBP are rising, USD Yen, they are rising it. And this is how they make the contrarian move in the market. As a result, you find all the Yen crosses will try to gain massively in the process. Now, in the case of CHF, it has only dropped about 16 pips when Euro has gained about 101 pips. So which shows very clearly the players do not want to drop big USD CHF, and when Euro is gaining, normally people relate it when Euro gains, USD CHF will strengthen, or USD CHF will drop, or CHF will strengthen. And as a contrary, what they have done is they made a nominal dip in the case of USD CHF, but big gain in the case of Euro. This is how they try to bring in the contrarian move. Then, the case of Canadian dollar and that of the Australian dollar, we come across the USD weakening move. They are doing the USD weakening move, but the majors are doing the mixed move. Some are showing the USD weakening, some are showing USD gaining, like USD Yen and USD CHF. It is only a nominal USD weakening move they are shown. So this is how they handle the crosses, and subsequently they are expected to make more contrarian move in coming days. Now let us go into the webinar part of it. Every week beginning on Monday, I give the session-wise forecast for Monday to Friday, and also give the long-term forecast. And I was giving the explanation that they are going to do the shift in trading zone in the case of Euro and GBP, as well as in the case of USD CHF and USD Yen, on the upward shift in trading zone. In the process, they have already gained the level. Last week, they just created the fear to that of the traders. And normally, when the fear is created in the market, the trader is going for a distressed trade. Many of the traders would have taken a buy position on Monday or Tuesday, and when they pretend as if they are going to make an indefinite drop after that of British exit, so immediately those who have gone long would have just liquidated the long position and turned short, and which has helped the players to gain massively on Friday. And then today, as a result, those who are traded without the stop or the hedge will be vulnerably caught, and they have to pay a huge penalty for following the market sentiment. So this is how the players create the market sentiment and act against that of the traders. Now, after so much of gain in the market, traders tend to see that Euro and GBP have breached all the resistance and gone above. So breaching further resistance could be much easier for Euro and GBP. That is how they will assume and try to go in for a breakout trade. Once it breaches the resistance and stay above there, then immediately the traders will jump into that of the buy positions. But you have to keep in mind, all quick moves are false moves in the market. What is the hurry for them to quickly gain the level during start of the week, when not many traders would have placed the orders as a sell order or a buy order? Or if there are buy orders, then obviously it will be lower than that of Friday close level. But they did not go down, but they made a small upward gap opening, and from there quickly gained the levels during the early part of the Japanese session. Afterwards, they are simply holding it, and they are sporadically doing upward stop and coming down. So they are holding high and doing the pump and dump moves. That is, they hold high with the help of the buy support, and any buy orders come from that of the traders, they just liquidate to them. Again, they will just firm up about 10-15 pips, and then when the buy orders come, they will just supply to them. If the orders are not coming, they will just bring it down the level lower so that the traders might place the buy order and then they sell it to them. So hold high and sell. This is the strategy the players are doing it after reaching the daily limit in a hurry during start of the day. So we will see the forecast. Then later on, I'll explain to you with regard to the levels. Besides the forecast, I also give the market reading. That is how we can note down the initial lows and the highs around 3:30 GMT and in the 4 majors and 2 commodities, and try to read the intentions of the players with the help of those levels. Besides, we use the trading strategy to limit the risk and maximize the profit. These are all my contact details. If you are interested, you can make a note of it. And then if you want further clarifications, you are welcome to ask questions. And there is no trap and there is no compulsion that you have to become subscribed or something like that. This is mainly to extend the help in a continuous form. So in my trading system, we follow derived forecast and levels and fine-tune it using the market reading. Then finally, we try to take the appropriate trading decision. In the event, if the market goes against, we need to have that strategy to limit the risk and maximize the profit. For that, we use the hedging. So derived forecast, market reading, and live market analysis and the trading strategy are part of this particular process. Now, this is the forecast sheet for this week, 20th to 24th of June. This is the 3rd week of June. So monthly trending move, upward trending move is expected to happen in this week. So what are the type of moves they are going to do? Session-wise moves in this particular week. A small dip and the rise was envisaged, but they did not make the dip. Straight away, they gained the levels in the case of Euro and GBP. And then they are expected to make further rise during the European session and create the real euphoria in the market that there could be a free upward move. And when the traders think of going for a breakout trade, the players are expected to make the slide during the US session. So don't be in a hurry to sell, wait for the gain and see the highs are set, and also the net change is 150 pips in the case of Euro or more intraday, And also in the case of GBP, 250 pips. Then you can take a sell, keep the hedge order to limit the risk 30 pips above. When they start making the slide, keep stop at entry and then try to put profit during the downward move, which they are expected to make during that of the US session. Then afterwards, tomorrow, also they are expected to make the swing and slide during that of the Japanese session, and then start gaining the level during the European session and firm up during that of the US session. Then on Wednesday, they are expected to make a dip, create the feel that the UK Europe referendum might create some problem. They will just create one day before that of the voting and then firm up and then start sliding during that of the European session, telling that probably the exit poll or whatever the studies which is mixed, so anything can happen. It is something like cat on wall. They create forcibly the uncertainty for the traders to do distress trade, nothing more than that. Then subsequently, when the traders become jittery and liquidate the long position, or those who have taken the higher level position buy, liquidate their position at the lower level, booking loss, then they will start gaining the level. Then again on Thursday, they are expected to swing and slide during that of the Japanese session. And when the voting starts, they are expected to make the gain and then make some profit booking during that of the US session. On Friday, during that of the European session, the outcome of the poll will be seen. And before that, they are expected to gain the level and continue to gain the level with an upward spike on Friday and then continue the upward move for the weekend close. So this is how they are expected to make the moves in the market. This is what the forecast says. So carefully handle the positions. Use the hedge order to limit the risk, and they are expected to make after this an upward shift in trading zone, new trading zone in the case of euro, and all-time high, that is high for the recent time, and they are expected to go above 1.15, 1.17, and in the case of GBP, about 1.4849 or 1.50 and above, they are expected to gain the level, telling that no more risk in trading euro and GBP. And aggressively, they are expected to gain the level, and we could come across huge profit booking in the month of October. Before that, they are expected to make an upward move in a phenomenal way after this UK, the British exit voting and referendum. And next week is going to be the month end of June, and the new month starts. The 1st of July also fall in this week. And obviously, you know very well, whenever you come across in a week, the month gets over and the new month starts, and there are only 5 trading days. Obviously, the players are expected to bring in very big volatile moves. So they are expected to make again an extended downward stop, and alternatively in the case of euro and GBP, telling some stories and hit all the stops, and also hit the options and the futures during the expiry time and try to earn there, and then continue to gain the levels massively. At the time, you will come across USD and USD CHF are expected to make one-sided upward move, so that you will come across the contrarian moves to continue. Both the numerator as well as the denominator currencies are expected to gain the levels. Then Hassan has got a question. How do you see USDN during the British exit? So, as I explained, that they are expected to gain the levels in the case of USDN now, and also because already they have reached in the to the peak in the case of euro and GBP. Hardly a few more pips to complete the net permissible level for the day. Then they have no other option than to gain the levels in the case of USDN and slowly make small swings in the case of USD-CHF, so that you will come across all the four majors showing positive net change during the day. And they are expected to make a continuous gain in the case of USD-Yen, which will bring in enormous surprise to that of the traders, because when they are shown the new level low in the case of USD-Yen, 103.56, and immediately people thought that probably it might go below that of 100, but that is how they create the fear and then continue to gain the levels before gaining the levels in the case of Euro and GBP and hold high USD-Yen and then rise the levels in the case of Euro and GBP, telling two different stories. The story for Euro and GBP might be one, the story for USD-Yen might be another. As a result, you will find the contrarian move to continue. Now you come across the contrarian move, all the three are showing positive net change. So what story they have for this particular phenomenon? Similar stories will be seen in coming days. So don't give importance to that of the stories, and those stories are nothing but the stories just to create the uncertainty. Now these are all the expected ranges in this particular week. So Euro was expected to make a brief downward extended stop and suddenly, and so far there it has shown the low 1.1308 and the high is 1.1358, but they breached the high and staying above there for more than 30 minutes, and so they have got a potency to gain another 60 to 70 pips in the case of Euro, because they can gain up to 150 pips. So keep a note of it, and whenever you come across the dip closer to that of the initial high, you can take a buy as a technical trade and keep the hedge order below that of the high, and in case if they dip, book profit in the hedge and then hold the buy position, and if needed you can take another buy at a lower level, the recommended low, and then you can see that they will gain the level after that of British exit. Then in the case of GBP, they could make an extended downward stop into 1.43 or 1.4350 suddenly and then gain the levels. And here it shows the Friday low actually in the quote page, which is not corrected. Actual market low was 1.4390 and came up to 1.4611. They just breached the high by 11 pips, 12 pips, and then started coming down. So this is how they are making the fear creating move. They set the high, then breach it by 5 pips and come down. Then again breach it by another 2 pips and come down. So this way they do the pump and dump move. They quickly breach the high and then it creates the fear. And the traders think that it is going to go up. A breakout trade is a potency and buy. Then later on they will dump it. Then again they will pretend, go another 1 or 2 pips higher than that of the high and come down quickly in less than 30 minutes. This is how they will do the pump and dump. And the traders will think that ultimately if we take a buy in the case of GBP, they will continue to gain the level because there is an easing out fundamentally. But then they will say technically it was an overbought condition and probably it was not able to breach the resistance, and then they will simply drop it. Then everybody will think that okay, technical has to be given importance and then liquidate the long position, and later on you will find a fundamental drive that exit poll shows that there will be a continuity of UK along with that of Euro, and as a result you will find after the impact of the referendum there is going to be an upward spike in the case of GBP as well as Euro. Then in the case of Yen, before that they are expected to gain the levels quickly. A brief downward stop into low or slightly lower than that of the low is a great buy opportunity, and they are expected to gain the levels again. In the case of CHF, they might do the range bound swings here, slowly gain, but next week, during the trend reversal time, they will make extreme moves. in the case of USD CHF, show it above parity, etc. Then in the case of Canadian dollar, as I told you, that they are expected to make the either way swings from that of 1.27 area to 1.32 area. They are expected to make their swings during this particular phenomenon. They went up to 1.31 area and started coming down, and now you find that 1.2830 is the low. They have come closer to the low. They will make a downward stop and then make a gain again, and upward stop and make the slide. So on a daily basis, USD CAD is expected to make wide range swings. So whenever it breaches the high, you take a sell. Whenever it breaches the high, you book profit. That way, if you do it, you'll be able to easily make money. In the case of Australian dollar, they are expected to make the one-sided gain. They started breaching the highs. So, and they are still holding around that of the high. So they are expected to make the gains in the case of 4 majors alternatively, and in the case of Australian dollar also, and in the case of Canadian dollar, they are expected to make either way swings. Now coming to that of their market reading, I noted down the initial lows and the highs in all the 4 majors and 2 commodity pairs. So the low is not being breached in the case of Euro 1.1308 and 1.1358 is the high. They breached the high and went up by another 20-25 pips and come down. And when they come closer to the initial high, you watch whether they are breaching it or not. If they don't breach after reaching closer to that, not breached it for 30 minutes, you can take a buy. Otherwise, if they breach the low, then they will make a downward stop and then start gaining the level. So watch that carefully and then take positions. And always, whenever they come closer to that of the initial high, closer to that of the initial low, watch calmly for 10 to 30 minutes and then take trading decision. Don't keep the order beforehand, and probably they might fill, but they may go another 15-20 pips lower and you will develop the fear. And so always keep the order mentally, whatever the level you decide to enter near the low, and see how they are handling the market after coming to the low, and then try to place the order. And always keep in mind, when they come closer to low, at least they will make 2 swings before making a rise. So first swing, they are not breaching it. Second swing, if they come closer again, not breach, you take a buy. Then it will go up. Then in the case of JPB, 1.4390 was the low, which is quite far away, and 1.4611 was the high. They just breached it by 5 pips to start with, 1.4616, and then subsequently they came up to 1.4623 and come below of the initial high. So they are doing the pump and dump, and GBP European session, they will keep it bullish, and later on they will show some profit booking move on the downside once the US session starts. US session, they will induce the traders to take buy position during the start and then start making the slide, induce them to liquidate the long position what they are taken at the highest level, because normally the traders go in for breakout trade during such times. Then in the case of yen, 104.42 is the low and 104.84 is the high. They are not breached the low or the high. So they are going to be range bound to start with. And later on during the US session, they are expected to gain more level when Euro and GBP are dropping. And in the case of CHF, 95.87 is the low. They just breached the low by 7 pips and come up and come closer to that of the low. And 96.42 is the high, and so they are likely to come down suddenly during the European session. In the case of CHF, when Euro is gaining up to 150 pips net change level, that is what they plan now. They will make a drop in the case of USD CHF. Then Canadian dollar, 1.2830 is the low. They are not breached it, even though they are close. They are very close to that of the low. The high was 1.2878, and they are not breached that. And in the case of Australian dollar, they are likely to do a downward stop and followed by that upward stop and during that of the US session. Then Australian dollar, 74.08 is the low, which is not breached. 74.44 is the high. They have breached the high and then went up and still staying above that of the high. So one can take a buy. And you know that the commodity pairs lead the rally to start with. Then later on lag behind. During the weekend time, don't take buy position in the case of commodities because they will focus more on the majors at that time. So you have to understand the timing of the markets and then choose the appropriate currency and then take positions. And you can also easily see what currency they are going to handle at a given time by looking into that of the highs and the lows. When they breach the high and just come down, then probably they will come slightly lower and induce the traders holding long position to liquidate and then go up again, make an upward stop and during that of the early part of the European session, hold high and distribute the buy position. So this is how they are expected to do in the case of GBP. Once it goes 250 pips net change level, then beyond that another 5-10 pips they may go, but they cannot sustain and they are not supposed to close the market at that level. So they will go in for a profit booking during that of the European session from mid US session onwards. So track them carefully and then trade accordingly. So I'm not recommending the trade in the case of Euro and GBP at the moment because we have to see what is the new high they are showing it and then try to take the sell position during that of the European session. But you can take a buy near that of the low in the case of USDN, or you can take a buy near that of the initial high 0.7444 in the case of Australian dollar. But from there, the low is just hardly about 32 pips. So wait how far they are handling the high. And if the breach come down below and come to that of the low, when they are making a small dip in the case of Euro or GBP, at the time watch and try to take the buy near that of the low. So when you take a position during such stop and times, during that of the gap times, then you will be able to see that the position start making profit during the session. Okay, here is a question. When is the best time to take buy position in Euro and GBP? Is it Thursday night during European session? Yes, during the European session on Thursday, 23rd, when they are making a dip, one can take the buy positions. And they could gain further levels here because once they reach 250 pips in the case of GBP, at least they will gain another 100 pips next day before making any drop. So always keep in mind that the weekly permissible level is 350 pips in the case of Euro. They can gain up to 350 pips from that of the previous week close, Friday close, and 600 pips in the case of GBP. So they will try to make use of the potency in order to gain maximum levels. From there, they will start dumping so that people will really become panic. They have to, similar to that of the gain what they have done about 200, 250 pips, they have to make a drop of 300 pips also at times so that the traders really find that market is falling free. And so then the emotions are triggered. Then automatically the trade is going for a sell and buy trade after the drop. Then they get caught vulnerably. So they know again and again the emotions of the traders can be triggered by making quick moves in the market, and the traders are bound to lose money. And so they identify the weakest point of the trader, namely the fear, and try to exploit it to a greater extent. So these are all the market timings. Early in the late sessions, they handle the majors, and the mid sessions they handle the crosses. So these are all the vital points. I just given it for those who are trying to follow my trades, and then also use the live market code page to take appropriate position so that you'll be able to really make small swing profit to start with and build up your equity. Then later on you think of position trading. So I'll come back on 24th and give the review part of this Asian session live market analysis and forecast webinar. On Friday, we will know how exactly the market has moved, whether in line with that of the expectations of the forecast or against. So you will be able to do that. Then I'll be giving on 23rd the spike trade calls during that of the European session 8 GMT for 30 minutes and explain how exactly the market is expected to react for the UK-EU referendum voting. Then on 24th, during the start of the European session, when the results are out, I will try to show you how exactly the trades what I had taken on 23rd are showing the profit. In case if the market goes against my expectations, I will explain to you how exactly I use the hedging to earn money from the other market by doing either way trades. So we are prepared for either way moves of the market, but still we fine tune the forecast to see that the market moves in tandem with our expectations. But even in the unexpected condition, the market goes against us temporarily. Then we have the hedging to limit the risk and we'll book profit in the hedging. So do either way trading, and then the market continues to gain. We try to book profit in our buy position as well. So here there is a question. Dear professor, how about USD yen? Last week, did it drop beyond the permissible? Yes, they make the one-sided moves, and that is part of the yen. That is why I say that always we have to keep in mind that in the case of yen, small traders have to be very cautious because they can drop very massively, about 200, 300 pips in single day. Okay, what is the view on gold? Okay, gold is expected to make the range bound move. When the players are focusing on euro and GBP, they will just keep aside gold. And now, when the traders are uncertain about gold, they immediately said it is a risk haven strategy. So gained the levels in the case of gold. And they will normally gain the level in the case of gold after the British exit referendum move, and then they are expected to make profit booking move to certain time frame. But the upward trend is expected to continue, but in between they will make alternate moves that you have to carefully follow and then take. Don't immediately think when euro and GBP gain, gold should also gain. They simply book profit at that time. You know that margin which is released from by gold profit booking, they use it to pump up euro and GBP. So they are in all markets. So the same margin, they use it in different markets and pump up and book profit, pump up and book profit. That's how they do it. So the same money in a shorter time frame will work in different markets and earn multifold for them. So I take this opportunity, thank FX Street for the facilities provided to present the webinar, and you people for your patient listening. Keep in mind that British exit, they will use it only to create the hype, and from time to time they will say so many stories in order to bring in volatile moves, and always keep focused. But they want to make an upward shift in trading zone. Use the hedging order to limit the risk. And in the event, if the market goes against, use the hedge to book profit on the downward move, and then keep another hedge order to limit the risk. Once they start gaining the level, trail the hedge order up to that of the buy position. Then trail a stop in profit making position and maximize the profit. Calmly trade so that when you use the trading strategy, the emotion is not going to tell you to make wrong trades. So wish you happy trading. See you on Thursday before that of the referendum, and Friday we will see the outcome of it. Thank you one and all. Thank you, Fixed Rate. See you on Thursday.